right, and breaking news, here it comes, guys. Let's see if we get any significant moves today for NFP. All right, dollar up, euro trading down. Look at that, coming right back into our zone that we drew. NASDAQ retracements seem like they're coming in hot now. Gold also 1974, 1975 printing. Gold rejecting off of this resistance point, and wow, look at this volatility, guys, here this morning. Gold did shoot down. It's an interesting way this candle just keeps bouncing, though. Look at how this thing has just shot down, bounce, shot down, bounce. It keeps bouncing intra-candle, and now looking like it's even reversing a lot of those gains. Look at that. The dollar popped and now gave back all of those gains. What a nasty candle that was, guys. Rest in peace to people who are buy stop, sell stopping the news. That is, of course, we always talk about a very dangerous strategy to do. If you were buy stops and sell stops on this one, this was an ugly, ugly candle to do that on, as price immediately jumped back up. Let's go take a look at the numbers here and see if we have those in. We do, in fact, have 339,000 jobs created as opposed to the 193,000 jobs expected. However, what's causing that nasty reversal on the candle? It's this guy right here. The unemployment rate ticked up to 3.7% overall, higher than forecast at 3.5%. This is a jump of 0.3% in unemployment rate. So yes, some more jobs were created in the short term, but unemployment overall ticked up to 3.7%, marking a new high as of recently on the jobs market. This is an interesting perspective, because we are seeing two sides of the coin. Jobs created ticked up, but so did filing for unemployment, right? So very, very interesting to see that coming in today. So again, partially why we're seeing kind of a nasty candle. Usually when you get something that's just confirming in both ways, like for example, if both of these numbers, were green or better than expected, right? It would be kind of a one directional candle. Or if they're both red, that could be a one directional candle, right? So that is what we talk about when we see conflicting data coming in. It's like kind of like, here and there.
Man, getting a nice tan out here. How you doing?
Dude, I'm getting cooked by the sun and by this euro yen trade I'm stuck in. I took a sell trade.
Dude, you need the EdgeFinder.
The EdgeFinder?
Yeah, if you had the EdgeFinder, you would have known that smart money was actually long.
Really? So you're telling me I was selling when smart money was long, and if I had the EdgeFinder, I would have known that?
Exactly.
Pass me one of those EdgeFinders. Let me get one of those. Get our biggest discount of the summer. Get access to the EdgeFinder, our MT4 and MT5 softwares, indicators, and robots, all in a single 20% off discount offer. Take advantage using the links and promo codes down below in the description. What's your reaction to all these numbers, Eivind? What are you paying attention to today?
I am flustered, is that what I call it? Like, I don't know what to do. Like, this is just the worst thing that can ever happen. Two conflicting information. Though unemployment rate, I would argue, is more important. But still, we should have seen non-farm payrolls going lower for that to be conclusive. And to be honest with you, it just makes my life even worse.
Fair enough. Yeah, no, I mean, you do have, like we talked about earlier, we have two conflicting points of data. We have employment change ticking up. However, unemployment rate, the percentage of people unemployed, going up to 3.7% as well. Of course, unemployment being bad, employment being good in terms of if you're talking job strength, job market strength. But again, of course, that according to the Fed's kind of goal of getting inflation under control, stronger unemployment, data or employment data overall is, of course, going to be strong for the dollar as they may need to raise rates further. But, we've seen some jumps back and forth, Eivind. It's an interesting time right now in terms of market forecasts with that upcoming meeting in June 14th, where we have the decision as to whether or not the Fed wants to raise again or pause. Things have swung back and forth several times recently between the two: pause, rate hike, pause. They've gone back and forth. Right now, they seem to be leaning towards a pause, but I wonder how these new numbers here today shift the focus on that, if at all. Have you looked at the CME tool at all? Fed Watch tool?
That takes some time before that one starts popping up, but I think that what is kind of what the most important thing to look at is, does dollar go in a specific direction that kind of tell you. And of course, if you look at a 10-year T-note and 2-year T-note, but going over, if you have, I share my screen even, yeah, I'll share my screen. So if you have for the June meeting, 66% that's currently going to have is thinking that it's going to be no change. And we also have to, give a context to what this next meeting is. It's the June meeting. June meeting is non-existing meeting. It's just there to confirm everything is whatever it was before. Because the market is ending now. By 15th of June, we're dead by June. July is dead as a fish. So there's no trends, there is no the lack of volatility before we come back in August. So if Fed is going to have people in the market, moving the market, they can't do major changes now. They will do that in August when people are back from whatever their holidays are called. Just keeping things normal, keeping things non-changeable is kind of what I would expect the market to do.
Fair enough. Yeah. And an interesting reaction to this in terms of price here this morning. You've got the dollar. It jumped initially off of the news, but then immediately we could see this candle just evaporated in thin air. I mentioned earlier that it was a tough day for some of the news traders out there, people who buy stop and sell stop. This was probably a disastrous candle as it jumped, but only just long enough to reverse immediately after. So the dollar, though, I'm generally in the camp of trying to trade this thing towards a direction of a pause. We've been talking about that with the dollar. The dollar strength here, in my personal opinion, looks like it's kind of lost some of its steam here. It came back to a level of support that we had been watching, for several days on the streams and the show. 104 did in fact break to the downside, and I don't know. To me, price looks like it's now kind of flipping bearish for the foreseeable future. Of course, it's a bit early to tell. We do have more support levels that can be watched, but for me, as kind of a dollar bear at this time, rallies on the dollar look like selling opportunities. And I want to go back and double check that. I had a long discussion with myself and the audience, of course, about gold. And gold here on the 4-hour chart did in fact it hit up against this level of resistance, but has not made any significant breaks above it here today. If the dollar gets weak or stays weak here, weakening from here, I'm watching for a breakout on this 1984 mark, and then possible retests, I think, could be an interesting play. But again, it's going to very much depend on how economic data rolls out from here and whether or not that narrative of a pause from the Federal Reserve stays in play. So I don't know, Eivind, what are you watching? Feel free to share any charts you're interested in: oil, gold, currency pairs, whatever you're looking at.
Trevin, help me out here. In the morning, a bit late morning, but we had a VIP webinar this morning. I said we should come back up to resistance and that as a selling opportunity. It didn't quite go there, but I feel pretty confident that, well, at least we tried. So yes, I see for the next week now that we're gonna have dollar bearishness as an end of the year taking profit on dollar bullish, and then the next week we're gonna do opposite. The only problem this year is that we have been a bit late. We started 1st of June last year, or the year before that we started like 27th or 28th. 25th, sorry, of May, so we're a bit late on the bearishness, but the bearishness is kind of what I hoped for to see. And then if it makes a new low below 103.30, 40, then I'm going to catch the pullback, because this market, generally speaking, tends to be very aggressive to either direction, goes to target, and then falls back down again. So what am I looking at? Euro dollar bullish, Australian dollar bullish, pound dollar bullish, and New Zealand dollar bullish.
Yep. Yep. Okay. Yeah. So I was going to ask you if you had any thoughts on the euro, because that was another chart I was looking at myself. So look at this candle today. This broke above, retested, and intraday reversed. Are
Exactly.
you in? Are you in euro today?
No, I was eating food.
Oh, okay. Fair enough. Fair enough.
But also, it's NFP,
That was
like.
Yeah, I was going to say too that obviously if you had a pending limit order, you might have gotten filled on this candle. But oh my goodness, look at how perfectly. I haven't touched this zone, by the way, guys. The one that we drew, look at this. It just absolutely barely came underneath the low of that zone, just completely ate that whole zone up and then just shot back up. That is a beautiful test of support, and I think probably a testament to support right now, Eivind. I mean, we've been in this really strong downward trend, and finally the euro is getting a bit of a break here. Beautiful candles to the upside. Resistance seems to be holding as support. I mean, I think you may have some room here to the upside on that euro, especially with today's disappointing kind of dollar performance. There may be some kind of sell off on the close for the dollar. It'd be interesting to watch that going forward.
Yeah, I'm like happy that it makes our high and it stays up there. And well, of course, NFP can still kick you in the leg later. But at least with the news with the news we were given, it's at least not all dollar bullish. And yes, a fall like this is considered to me to be a buying opportunity. The same thing for pound, even though pound is high as a kite, but can continue going higher. Though you mentioned gold, and to me, I find this high to be a difficult one because of the fun. We are supposed to be bullish in this small little period here, but we haven't closed above 1980 yet. So that's kind of the kicker for me. So short term, yeah, sure, 1950, 1960, 1970 have been great buys short term wise, but more longer term, if you can break 1980, I think we have much more potential upside.
Yep. That's kind of where I'm at with gold too. Gold actually just popped up on the EdgeFinder. I'm just getting the latest in terms of watch list here. Gold just popped up on the EdgeFinder again. Flipping bullish here a little bit in regards to the score. It's only a 3, so it's not quite getting all the confirmations that I like to see. In terms of other things to be watching here today, you have lots of different sells right now. You've got things like Aussie Swiss. We talked a lot about the Aussie pairs yesterday, which I thought was kind of interesting. Aussie CAD is on there. The dollar's still getting kind of a bullish reading, but I've mentioned that fundamentally I don't necessarily like that idea, and so I'm kind of avoiding those currency pairs. Dollar yen, I'm still pretty bearish on. So if I was to have to trade dollar long, it'd probably be against the Japanese yen. But again, I just think that there are more opportunities out there. You got CAD yen, Aussie yen, could be ones to look at here. And then I also wanted to go back to this smart money tracker just for a second and clarify something here, guys. So I mentioned earlier that, big money, couple things to pay attention to, and Eivind and we both looked at these two things consecutively. Eivind says he's got a close eye on the euro. I mentioned I've got a close eye on gold. It's one of those things. Oh, Eivind, you got a sound alarm going off or something?
Yeah, I think I need to catch a fire alarm before the whole house burns down. Give me 2 minutes.
Yeah, no worries. So anyways, I wanted to go over this, guys. We were talking about gold. We're talking about the euro, and both of these things have an institutional long interest right now. But you might be saying, well, Nick, gold just went down on NFP. So you're telling me big money is wrong? Big money's losing money on this gold move to the downside? Well, the answer is you guys have to remember that institutional money is not trading the 5-minute and 15-minute chart. Big money has a large amount of money to move in and out of the markets. And so if they're going to move money in and out of the markets, it has to be a little bit higher time frame, as they have big positions to fill. They may still be long. They've been long for a while, and they may be anticipating a possible breakout. That's exactly what I'm looking for too. In terms of trades right now that I'm actively looking for, straight up, I'm looking for a breakout retest on gold. I'll probably look to get long. The other one that I'm looking at is the NASDAQ. I've had an interest in this one. I've been trading this one long, but I've got to wait for a pullback here. So I'm not quite getting that there. I think we haven't cleared at this level hard enough for me to look to get in here. I would like a pullback if possible to possibly, 14,250 as a maybe an attempt to entry. But again, that's a ways away. So even though I like it long, I can't really touch it up in these areas. So I'm just going to put that one on the sideburn.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EdgeFinder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.